One of the things I forgot, well, I wanted to mention one thing really quick before I go further on. Whenever you get a buy the close rally, whenever you get 2 or 3 consecutive bull bars on the open, usually you've got a good chance of a buy the close rally, and therefore you will have traders buying all the way up. And so what they'll do, they'll buy 1, they'll buy above 2, they'll buy above 3, they'll buy above 4, and they'll bet that the first reversal down will be minor, and they'll look to scale in, betting on a second leg. However, at the same time, whenever you get a buy the close rally that looks like this, that looks really climactic, typically what happens is you get a trading range lasting a lot of bars. Here, we ended up getting a larger second leg, but my overall thought on the day was we'd get a rally, a trading range lasting several hours, and then we'd get an attempt at some kind of second leg up, and we get an attempt at a trend resumption up. So here we formed a triangle. We got the upside breakout 27, pullback 28, 29, and then we tried to rally 30, 31. Then we got a doji. We got a bear bar on 32. So it looks like the market's going to start going sideways. 33 bull bar, not ideal, and then bear bar on 35 for the bears. Decent bear bar, but context not great. Type bull channel, so probably buyers below. And then we got a bull bar 36, follow through 30. Bull bar 35, follow through 36. For the bulls, they'll see it as a wedge top. They're hopeful. For the bears, they'll see it as a wedge top. The bulls want a bull breakout of the wedge top. Looks like we may get a couple of legs sideways to down. All of that depends on what the reversal looks like on 37. And you can see what happened with 37 and bar 38. 38, 37, not a strong bear bar, and then 38, a weak entry bar for the bears, but a bad high one, probably sellers above. 39, second leg down after 37, but it looks like we're probably going to go mostly sideways here. We have a high one by 39 in the type bull channel, and that lowers the probability for the bulls. Excuse me, it lowers the probability for the bears selling above. 40, bull bar, but going sideways, really not ideal for the sell. The bears, they had a chance at the wedge, the rallied at 36, but with the market going sideways, the correction might be sideways in a tight trading range rather than a reversal down. And therefore, that may limit the amount of traders. That may limit the amount of traders selling right here. Give me 1 second. We got a bull breakout on 41. For the bulls, strong enough breakout, probably going to go at least a little bit higher, and then follow through 42. Bulls, if you're buying momentum, you're not buying value, and therefore, if we get a bear bar closing on its low, those bulls may be quick to exit. And then we got another bull bar, 43, follow through 44. Strong enough breakout, second leg up, likely, and therefore, first reversal down, probably going to fail. But getting close to resistance, the 59.90 price level, and therefore there might be more traders buying here rather than, there might be more traders selling up here and taking profits rather than buying. Doji 45 and a bear bar 46. Strong enough reversal that you may have disappointed bulls who bought the close of 44, looking to buy more lower and looking to get out break even. Increases the risk that there might be sellers above 45. 47, bull bar, breakout pullback buy, you can call it a high one. Probably sellers above and sellers near the 44 close. Then we got a bear bar 48. Second entry sell, strong enough reversal bar, we may go a little bit lower, but I suspect there's probably buyers below the 47 low. Then outside up, 49, almost an outside bar. It's an equal high with 48. Good for the bulls, but outside bars are basically expanding triangles, and therefore there might be more traders selling up here rather than buying. Bear bar 50, closing on its low. Good for the bears. Probably going to pull back for a couple of bars, and then we have an entry bar 51, not great, but not a good buy above. And then we have follow through 52. Looks like we're going to go at least a little bit lower. And you can see we formed a type bear channel all the way down to 54, 55, 56. Micro channel down, probably sellers above, and at least a small second leg down. But you're getting near support. You're below the moving average and near the highs of 39 and 40 at the breakout points. And then we have another surprise 58. 58, good bar for the bears, but late in the sell-off, probably more traders buying this than selling it. Then we have a doji, 59, bears losing momentum, probably going to bounce. Bull bar 60, bad low 1, buyers below. And then bull bar 61, good for the bulls. But tight bear channel down to 58, so probably minor reversal. And then we have 3 consecutive bull bars, 61, 62. Strong enough breakout, I suspect probably buyers below in the first reversal up. First reversal down, probably going to be minor. 63, probably buyers below. 64, bad entry bar. And then we got the rally on 65, 66. Consecutive bull bars may go at least a little bit higher. And then we did on 68. 68 triggered the went above the 62 high, creating a second leg. But now we have 2 legs up for the bears, and the bears will see it as a large low 2 with 63 and 67. 67 outside bar, not ideal. And then doji 68, so minimum follow through. But I suspect probably more buyers below the 58 low than sellers. So if we do get down to the 58 low, probably buyers. And that's what happened. 69, 70. The bears ended up getting down to the low of the day, but they couldn't do anything with it. And the market found buyers and reversed up into the close. For stop entries, I thought the first reasonable stop entry, probably buying above 2. And then bulls, they can get out below 11, but probably minor. And then if bulls do get out below 11, I think it's hard to buy again. They can buy 13, but an inside bar, not ideal. They could buy above 31, 32, but same thing, not ideal. Maybe they buy above 35, but possibly a third leg up in a channel. You can argue tight bull channel, so small pullback bull trend, and therefore counting wedge tops and small pullback bull trends is not ideal, and therefore you should exclude them. But okay, buy above 35. But then what do you do at 37? Probably okay to exit longs, but then you got to figure out a way to buy again, maybe above 41. And if you buy above 41, you get out below 45 or 46. And then if you didn't, you probably get out below 49 or 50. Bears, they can be short. And then those bears probably get out above a bull bar, either 59 or 61. Let me just check something really quick. And that's probably it for stop entries. Limit orders. I thought buyers below 11, scaling in lower, but you need a wide stop. Probably sellers above 12, sellers above 13. I thought buyers below 15 low. And then all through here, it's really buy below anything, especially small 2-legged moves down. Buy the close, buy below for a bounce. And then I thought probably sellers near the close of 44 during 48. And then sellers above, but we never triggered. And then down here, it's better to buy than sell. So buyers below 60. And then maybe sellers above 62 during 66, but tough to do. And then I thought buyers below 71. Obviously, there's more trades than just that. Buy the close, sell the close. Buy the close bar 1, probably buy the close bar 2, 3, 4, 5, and 6. And as far as buying 1, I think it's okay to wait. And then buy the close bar 7. That's probably okay. So anyways, I mentioned buy the close through here. Maybe buy the close 41, 42. And then maybe sell the close 52, 53. Not ideal. And then that's probably it for buy the close, sell the close. Let me take a look at some questions. Can you talk about some of the trades I took? Yeah, I mentioned through here that I think I bought the close. I think I bought the close of 3, scalped out on 4, and I bought again on 4 and got out. And then I can't remember if I bought in here, but I remember I sold a close of 10. The reason I sold 10 is at that point we had 10 bar bull micro channel, and I thought the odds were high. 2 legs up, we'd fall below 11. So I sold the close of 10, scalped out. And I think I bought at some point during 12. I don't remember if I bought somewhere in here and added on, or if I just bought once and then I got out somewhere in this area. I think I bought, and then when it rallied, I ended up buying more down here and then getting out somewhere up here. And then I mentioned I sold the close at 36 and got out for a small profit here. And then I think I bought once in here. And I think that's all I did for pretty much the rest of the day. Let me take a look at other questions. So they asked if I would talk about this for May 15th and May 19th. So first off, a system quality number, you need more. You're not going to measure your SQN based on 1 or 2 days. You're going to measure it over a basket, maybe over 50 or 100 trades. You want to measure it over a long-term period of time, not just one. So I would add these together. But as far as this is your system quality number, they've got 12 trades, and the sum of their total trades is 225 R. I'm assuming they're measuring R in terms of dollars, which is fine. And standard deviation, that all makes sense. So basically, their SQN is 0.9. SQN of 0.9 is really not that great of a system. And so, by the way, by the looks of it, it'd be easier if let's just try and manipulate this. So if you had let's say $50 is 1 R. So 50, maybe that's 1.1 R, 0.4 R minus 1.1 R. Maybe that's minus 2.1 R, 0.4 R, and 122. Maybe that's 2.45 R, 1 R, 1.1 R, 0.4. Maybe that's 1.4. And maybe that's 1.1, 1.1 minus 1.9. So you can see it's 0.8. I was more just curious. So even, as far as is this a good system? Well, the reality is, twofold. One, 0.9 SQN is going to have a lot of variability. And therefore, as far as what it tells me is, one, you're going to have a lot of variation as far as your profit, and therefore your losses, instead of an equity curve being like this, there's going to be bigger slopes. It's profitable, but again, I'd rather have a higher SQN, which means even if you could get this down to 50 and get that down to negative 50, your SQN would improve. So here, your SQN is 4, mainly because you didn't have that many losing trades, and your losing trades, your largest loser was $32. And therefore, because of that, that's why your SQN is 4. So this is great. That's much better. But you can see your win rate was higher, and your probably averages were the same. So if you look right here, 45, 47, your average and your standard deviation are very close to the same. But look right here, your average R is $18. That doesn't seem right. Yeah, your average R is $18 and your standard deviation is 70. So that's the problem. Where was your stop when you were buying 2 and 7? Yeah, I think when I bought the close of 3, I had to stop at twice the range of bar 3. So I bought the close and I put a stop somewhere down here, and I was willing to scale in, and I'd manage the trade accordingly. When I bought the close of 7, I don't remember if I bought 7 or not, but if I did, I'd probably have a stop. I don't think I bought the close of 7 because I would have probably wanted to buy a pullback closer to the breakout point and not have gotten filled. But if I did, I'd have a stop somewhere down here. So where do we go tomorrow? I think we'll probably get up to 6,000. We're so close to it that the odds are we're probably going to have to get there. So we're probably going to test up to 6,000 some point overnight or tomorrow. But at the same time, I think we probably will pull back soon and at least go sideways and bring the moving average up. But we'll see. All right. Thanks, everyone, for tuning in. Hope everyone has a great rest of their day.